Welcome to another video edition of the International Tax Post. Our guest today is David Sutherland, a regional Asia-Pacific tax director for Morgan Stanley. Dave is a U.S. tax lawyer. He practiced in Washington, then worked in the Treasury Department, and then joined Morgan Stanley about 12 years ago and has been in Asia as their regional head. He's very well known in the tax community, and we're very fortunate to get some time with him out of his busy travel schedule. So welcome, Dave.
Thank you.
Now, let's start with U.S. tax. There's been some reform proposals. There's been a focus lately on information reporting. From the Morgan Stanley or U.S. multinationals perspective, is there any aspect of that that particularly concerns you?
Well, I would say that it was a enlightening experience, I think, when we all saw how much tax evasion there had been. I think that the revelations out of Liechtenstein were disturbing for all of us, and I don't think anyone wants to try to facilitate tax evasion, or at least none of the major multinationals do, and certainly at Morgan Stanley we don't. And so we have a lot of sympathy for the government trying to do something to try to protect the revenue base. I think it's important that everyone pay their fair share. At the same time, of course, it's important not to overstep the bounds and not to get in the way of legitimate business. And so trying to create that balance is sometimes a little bit difficult. Many of the recent proposals are a little bit troublesome to us because America is the only country in the world that taxes its overseas citizens. And so if you try to implement a tax regime which completely covers and gets reports to the IRS for everything an American does overseas, it can be quite painful. And the natural reaction to many of the vendors overseas would be to say, I just don't want to do business with Americans. It's just too difficult to deal with them. I had a friend not so long ago that was applying for a mortgage here in Hong Kong on Hong Kong real estate, and they applied to a U.S. institution. The U.S. institution says no, they won't give it to an American citizen because it's too much trouble. There's too much paperwork for them to do. I know I had American Express call me a few years ago, and they wanted me to apply for a personal line of credit on their credit card, and we got all the way to the end, and after I'd filed all this paperwork, and they came to the end and said, oh, you're a U.S. citizen, we don't offer this product to U.S. citizens. So this is American Express. They offer it to Germans, Japanese, Australians, British, but they won't offer it to Americans. And so to the extent that the U.S. tax law becomes so concerned at ensuring compliance that it becomes very difficult for Americans to actually live overseas, that obviously would be challenging and difficult for all of us.
Right. How about from a corporate perspective, Subpart F, does that give you a lot of headaches, or is it manageable?
Well, I think it's self-evident that almost every other country in the world is going to a more territorial system. The basic idea in the world now is that you should pay tax in the country in which you earn the income. So most of the countries in the world, actually you could take the top 20, most of the countries in the world already were a territorial basis. And the few exceptions to that, including Japan, UK, Australia, have all now gone to a territorial base as well. And the United States, instead of sticking with its own very aggressive residence-based system, is now trying to expand that even more to ensure that people don't hide, companies don't hide their money overseas, which I can understand to a certain extent, but you have to take into account the United States is getting more and more and more out of line with the rest of the world, and it genuinely does create significant competitive disadvantages. I'm aware of a M&A situation recently where they were looking at, a U.S. company was looking at an acquisition here in Asia. The acquiring company was paying about a 10% tax rate, and the U.S. company looked at it and said, well, we have to put a 35% tax rate on. So when they put the value, they took the after-tax income, they took the projected revenue stream, reduced it by 35% to figure out what they were willing to pay. And everyone other than Americans were reducing it by only 10%, so they're taking 90% of the revenue stream. And that was a huge factor in the negotiations for the value of those businesses. And you're basically dealing with a situation now when, if the market is efficient, no American company can have a competitive price in acquiring any other foreign company. And that just can't be good for the U.S. economy.
Right. Okay, well, let's look at local tax. M&A, for example. India, the other day, I guess, issued another show cause notice to Vodafone on their offshore acquisition of the structure which ultimately owned the Indian business. You've been in India lobbying for improvements in the tax regime there. How do you see that developing?
Well, India is an unusual place. I think that the society is very litigious, not just in tax, just on everything. And the philosophy there, they're very, very allergic to allegations of corruption. So the government wants to be sure that there's no truth to corruption allegations. And as a result, they've created a system in which tax authorities cannot settle matters because they're afraid that if somebody can settle it, then they might be accused of doing something inappropriate. And as a result, almost every major tax dispute goes through an enormous amount of litigation before it's finally resolved. And I just don't think it can be that the only people in India that are smart enough to resolve a tax case are the people that work for the Supreme Court. It has to be somebody else that can resolve a tax case. So there's a coalition of 15 major multinationals that have been working with the Indian government to try to improve the tax system and to make the dispute resolution system work more efficiently. I think that the government officials in Delhi have been very open and amenable to that. And so we're hoping to see what has been by far the most difficult tax regime in Asia to deal with. That we're hoping to see some improvement in that over the next few years. Having said that, I think that the tax assessors are still rewarded, not necessarily financially, but in their career and by their superiors and perceived to do a good job, the more revenue that they assert. So the more collections they assert. And that's creating very, very difficult situations for multinational business. Multinational business is perfectly happy to pay its fair share, but if they earn $100 in India, they don't want to pay $300 in tax, obviously. So they want to pay some reasonable percentage, and they also want it predictable what they're going to pay. And at the moment, the system, the incentives to the tax assessors make that very difficult to achieve.
Okay. How about China, the big neighbor to the north here? You feeling more tax pressure there?
China, I think, has pursued is similar in its economic growth to India in that it's a huge country, and it is evolving quickly. And so there's a lot of similarities between India and China. India has started with the proposition that we're going to tax everything and it's beginning to liberalize. China, I think, has started with a very decentralized system. Often, the difficult thing is just trying to deal with the decentralized system so that you have different tax assessors for every province, every region, and for every different kinds of tax. So it's just lots of little stuff. Those people historically have been not very sophisticated. What's happening now is that China is trying to correct that and move more towards a more rationalized basis of taxation. As they do that, they're going from what I would think is a reasonably benign tax system into a more aggressive tax system, which I think is very understandable and appropriate. But at the same time, it's hard to get it exactly right the first time, so I think that China is doing a good job of moving along this scale. They've issued a few judgments that are probably a little bit too much, but hopefully they will be able to appreciate that and be able to moderate and to collect an appropriate amount of tax for the country without stymieing international business.